Personal finance. What is personal finance? Personal finance is a term that covers managing your money as well as saving and investing. It encompasses budgeting, banking, insurance and mortgage, investment, retirement planning, tax, and real estate planning. Often refers to the entire industry that provides financial services to individuals and households. Author advised them about financial and investment opportunities. Personal finance is about meeting personal financial goals, whether it's having enough for short-term financial needs, planning for retirement, or saving for your child's college education. It all depends on your income, expenses, living requirements, or individual goals and desires, plus coming up with a plan to fulfill those needs within your financial constraints. To make the most of your income and savings, it's important to become financial literate so you can distinguish between good and bad advice. Then make smart decisions. Hence, personal finance strategies. The sooner you start financial planning, the better. But it's never too late to create financial goals. Give yourself and your family financial security and freedom. Here are the best practices and tips for personal finance. 1. Devise a budget. Budget is essential to live within your means and saving enough to meet your long-term goals. 50-30-20 budgeting method offers a great framework. It breaks down like this. 50% of your take-home pay or net income goes forward living. Essential expense such as rental, utilities, groceries, and transportation. 30% is located to lifestyle expenses such as dining out and shopping for clothes. 20% goes towards the future, paying down debt and saving both for retirement and for emergency. To create an emergency fund, it's important to pay yourself first to ensure money. Money is set aside for unexpected expenses such as medical bills, big car repair, rental if you get let off, and more. Between 3 and 6 months worth of living expense is the ideal safety net. Financial experts generally recommend putting away 20% of each paycheck every month, which of course you were already budgeted for. You will fill up your rainy day fund for emergencies or sudden unemployment. Don't stop. Continue funneling the monthly 20% toward other financial goals, such as a retirement fund. 3. Limit debt. It sounds simple enough to keep debt from getting out of hand. Don't spend more than you earn. Of course, most people do have to borrow from time to time, and sometimes going into debt can be advantageous if it leads to acquiring an asset. Taking out a mortgage to buy a house is one good example. But leasing can sometimes be more economical than buying outright. Whether you are renting a property, leasing a car, or even getting a subscription to computer software, 4. Use credit cards wisely. Credit cards can be major debt traps. It's unrealistic not to own any in the contemporary world, and they have applications other than as a tool to buy things. Not only are they crucial to establishing your credit rating, but they are also a great way to track spending, which can be a big budgeting aid. Using a credit card is another way to ensure you will not be paying for accumulated small purchases over an extended period with interest. 5. Monitor your credit score. Credit cards are the main vehicle through which your credit score is built and maintained. So watching credit spending goes hand in hand with monitoring your credit score. If you ever want to obtain a lease, mortgage, or any other type of financing, you will need a solid credit history behind you. Factors that determine your score include how long you've had credit, your payment histories, and your debt to credit ratio. Credit scores are calculated between 300 and 850. Here's one rough way to look at it. 720 good credit. 650 is average credit. 600 or less poor credit. 6. Consider your family to protect the assets in your estate and ensure that your wishes are followed when you die. Be sure you make a will and, depending on your needs, possibly set up one or more trusts. You also need to look into insurance, auto, home, life, disability, and long-term care insurance. Periodically review your policy to make sure it meets your family needs through life major milestones. 7. Pay off student loans. There are myriad loan payment plans and payment reduction strategies available to graduates. If you are stuck with a high interest rate, paying off the principal faster can make sense. On the other hand, minimizing repayments can free up income to invest elsewhere or put into retirement saving while you are young. And your nest egg will get the maximum benefit from compounded interest. Some federal and private loans are even eligible for a rate reduction if the borrower enrolls in auto payment. Flexible federal payment programs worth checking out include graduated payment, progressively increased the monthly payment over 10 years, extended repayment, stretch the loan out over a period that can be as long as 25 years. Income-driven payment based on your income and family size. It limits payments to 10 to 20% of your income. 8. Plan for retirement. Retirement may seem like a lifetime away, but it arrives much sooner than you would expect. Experts suggest that most people will need about 80% of their current salary in retirement. The younger you start, the more you benefit from what advisors like to call the magic of compounding interest. How small amounts grow over. Investing is only one part of planning for retirement. The strategies include waiting as long as possible before opting, receive Social Security benefits, like converting a term life insurance policy to a permanent life one. 9. Maximize tax breaks. Due to an overly complex tax code, many individuals leave hundreds or even thousands of dollars sitting on the table every year. By maximizing your tax savings, you will free up money that can be invested in the reduction of the past debts, your enjoyment of the present, and your plans for the future. 10. Give yourself a break. Budgeting and planning can seem full of deprivation. Make sure you reward yourself now and whether it's a vacation, purchase, or an occasional night on the town. You need to enjoy the fruits of your labor. So, give you a taste of the financial independence you are working so hard for. Reference Personal Finance. I really appreciate you for watching any lSovann daily video. In order to receive endless financial and investment videos, please like, share, comment on my Facebook page and subscribe to my YouTube channel. Always.